Welcome all of you to join the third quarter performance review of CDF in 2022. There will be 4 parts of today's investor conference. First of all, we will invite the CEO of CDF, Steve Bertamini, to explain the performance highlight. He will also cover the strategy update of our ABCD strategy. Next, we will invite the CFO, Jenny Huang, to introduce the financial overview of CDF. As for the subsidiaries, Mandy Zhao will brief the performance overview of each subsidiary. And the last part is QA. And the QA arrangement is the same as the last investor conference. We will invite the corporate investors and professional analysts to ask questions first. Then the media friends can ask questions. Before I invite our CEO to say a few words, please select the language for interpretation if you're required.
Good afternoon, everyone. I'd like to begin by giving you a brief update of our third quarter financial performance. Our 9-month results were $20.3 billion, ranking us number 4 among the financial holding companies. If you exclude the one-off building sale last year, we're down only 10% year on year. We also launched our employee trust shareholding plan in October, and we completed the first phase of our green power procurement by purchasing 5 million kilowatts of green energy for the next 5 years. In terms of China Life delivered $18.2 billion in net income. They continue to remain focused on our VNB margin strategy, which increased to 36.8%, up from 27% during the same period last year. And also the investment returns reached 4.65%, up 16 basis points year on year. In terms of KGI Bank, net income was up 30% to $4.7 billion. They also continued to maintain a superior NIM of 1.42, and both SME and personal loans grew by 23% year on year. We continue to see very strong results from our consumer finance joint venture, which delivered RMB 86.7 million in profit during the first 9 months, and the balance sheet and the lending has grown by almost 100%. CDIB Capital managed to reduce our loss to $0.59 billion. They also completed 2 new fundraisings for $1.35 billion and continue to draw down on our green investments by $500 million during the first 9 months of 2022. KGI Securities delivered net income of $2.7 billion while maintaining their leading ECM and DCM position. They're also the first to launch digital video signing services in Taiwan, and the first to launch an EFT IPO online subscription service. I'd like to make a few comments regarding our strategy. First of all, we continue to see solid progress in every aspect of our strategy. What I'll do today is just highlight a few examples in each one of our subsidiaries. You can turn to page 8 on China Life. China Life continues to make progress on their facial recognition, and we received approval from the regulator to launch this across all channels. We've also added more than 70 functions to our customer app, which resulting in an increase in usage of 25%. We saw strong results in the employee survey, up 16% year on year, and our NPS moved to the top 5. As mentioned previously, China Life continues to focusing on high-value segment sales and saw a big increase this year compared to last year. We continue to focus on our agency channel, both in terms of productivity and adding staff. In terms of KGI Bank, also continuing to make strong progress. We launched our 14th ecosystem partner with Q Taxi and also a 24/7 smart customer service online platform. Our employee survey results also improved from 65 to 71%, and we launched Workday, which is a platform that all our subsidiaries have launched together in order to provide much better services to our staff. We saw a very high migration to their new mobile app. Over 95% of the customers have migrated, and we've now rolled out NPS across all 4 channels. We continue to use data-driven marketing and analytics to reactivate dormant accounts and improve response rates, and we saw green financing grow 31% year on year. In terms of CDIB Capital, they continue to do work in all our key sectors, having completed 12 deals. We've also seen many processes improved by staff, 77 during the last 9 months. They continue to refer many opportunities to the business, which can be either in securities or at the bank, as well as China Life. We established a foothold in Tokyo in order to help build startups and ecosystems, both between Taiwan and Japan. And as you're aware, they upstreamed $8 billion this year from the sale of our building last year. In terms of green finance, we also saw almost $500 million in green investment in energy vehicle deployment. KGI Securities continue to make good progress in terms of building digital ecosystems as well. They're co-branding now with Chenghua Post and also introduced live chat online account openings. We continue to enhance our customer service experience, and we continue to also work on increasing our reach in terms of online customers. You can see that in terms of LINE, we've now reached 1.2 million followers. KGI Securities also continues to make progress on green financing up to $70 billion, which is up 115% on last year. I'll now turn it over to Jenny to give you some updates on our financial results.
Next, I will introduce the financial overview. Please go to page 13. The first 9-month net profit is 22 billion, and China Life contributed 16 billion, accounted for 71% of the total net income. KGIB is 4.2 billion, accounted for 22%. CDIB posted a loss of 592 million due to the volatility in the capital market and the mark-to-market impact to the investment positions, but our valuation is still better than the peers. KGIS contributed 2.4%, accounted for 11%. And year-on-year comparison between the first and the bottom table. Last year, our net income was 30 billion, and including the 8 billion disposal of the old building. And the first 9 months income was 22 billion last year. Even though this year our net income dropped year on year, we can still see the year-on-year difference. China Life increased 3.7 billion income due to CDI recognized 100% of China Life's contribution. Last year, we only recognized 56%. And KGIB increased 1.1 billion compared with last year. And this year, spread and loan balance both grew. The relevant income have both climbed compared with last year, and CDIB posted a loss, and KGIS dropped 5 billion. Compared with the same period last year, the trading volume dropped 36% in the daily trading volume in the market. Due to the turmoil in the capital market, the investment position performance was also impacted. Please go to page 14. I will briefly introduce our asset and liability. The consolidated asset is 3.6 trillion and a 7% growth year on year. And discount and loan grew 7%, and loan and deposit increased 11%, and the reserve increased 8%. Please go to page 15. This is our leverage ratio on the top right. The leverage ratio from 11.8 times climbed to 21.5 times this year. This is due to CDF recognized China Life's OCI unrealized loss and caused the net worth drop. and it was a 43% drop. So the leverage ratio increased. The 9-month ROAE was 11.8%. Please go to page 16. In this table, we can see the capital adequacy ratio. All of our subsidiaries exceeding the minimum threshold of the regulatory requirement. KGIB's CAR dropped from 15% last year to 12.7%. That is due to the net worth decrease. However, KGIB is actively adjusting their capital allocation. There's no issue of insufficient capital. I would like to highlight the double leverage ratio in CDF as end of September was 134%. As you all know, we have announced the asset reclassification of China Life. After the reclassification, our net worth have increased 30 billion. If we consider the reclassification, our double leverage ratio will reduce to 128%. We still have part of the asset haven't been reclassified, and we still see OCI losses. And this double leverage ratio is still slightly higher than the regulatory required 125%. However, it will further reduce in the future. And due to the IFRS 17 haven't been adopted by the regulator, our liability haven't been marked to market. After we adopt IFRS 17, we expect to see the net worth to increase. And that's the report from the financial aspect.
Next, for China Life, I'll talk about the operation in Q3. Please go to page 18. Since years are affected by rate hike, capital market fluctuation, and the pandemic, the overall life insurance industry's profitability and premium momentum has been impacted. Through sound ALM, China Life has grasped new money investment opportunities and continued to promote high-value products. China Life's net income in the first 9 months was 18.2 billion, and the ROE is 19.62, EPS 3.69. Affected by rate hike and market fluctuation, the net worth at the end of September was 70 billion. And due to asset reclassification, using October 1st as the date of a reclassification, our equity will increase over 30 billion. Next page. Affected by market environment, the overall industry FYP drop was 20%. China Life also saw an 80% drop, but because we focus on high value products, as you can see, regular pay has accounted for 39% of our FYP and increased close to 30% YOY, and FYPE we saw an increase of 17%, and our 6-pay product has also increased to 82%. Now for distribution channel, China Life maintained a balanced approach, and we continue to focus on the number of agents. For agency channel, the percentage is pretty much the same compared to last year. However, because of our focus of high value product, the sales of 6+ pay product nearly doubled YOY. Page 20th. You can see our overall operation. Because we continue to focus on regular pay and high value products, for VNB, we increased 3%, reaching 16.1 billion. On the other side, VNB margin of traditional product has increased to 36.8% YOY. And for the spread, the first 9 months, our ROI is 4.65%, and our COL maintained at a low level, 2.98%. So the investment spread was wider YOY. Next slide. This is our investment portfolio. Because of the market volatility, we continue to maintain a stable ALM. At the same time, we grasp investment opportunities during rate hike and continue to invest in quality foreign bonds and the ROI of various assets. For deposits and short-term investment, 0.35, domestic bonds 3.47, domestic stock 15.71, secure loan 3.21, policy loan 5.24, real estate 2.18, foreign currency deposit 0.39, foreign bonds 4.16, foreign stocks 2, overall ROI 4.65. Next slide. This is our investment performance. Recurring yield plays a very important role. In the first 9 months, reached 3.75 in 13 bips increase. And for hedging, we still maintain a stable strategy. The hedging ratio is around 70%, and because of USD appreciation, the hedging cost was negative 0.18%. And for FX, our FX reserve balance has accumulated to 16.53 billion. Next, page 24, KGIB. Due to rate hike and high volatility in the markets, KGIB saw a stable growth in its overall business, including the cumulative net revenue for the first 9 months was 10.3 billion, and cumulative net income was 4.74 billion, an annual growth rate of 30%. And because of rate hike, as you can see in the bottom, the spread continued to increase since Q2, and Q3 reached 1.91, and the average of the first 9 months was 1.83. In the Q3's NIM was 1.42, a slight drop from the previous quarter, mainly due to the increase of cost of deposit in response to rate hike. The cumulative NIM in the first 9 months was 1.42, same as our expectation. Through prudent and continuous stable growth of various businesses, we have maintained a stable asset quality through prudent credit risk management. Next slide. The total loan balance was 408 billion at Q3, a 10% increase year on year. And we continue to optimize our mix. SME loans grew 23%, personal loan grew by 15%. These two are still the key. The annual target is still at 15 to 20%. And for the deposit mix, at Q3, it increased 9% YOY, and because of rate hike and the volatile financial market and also tight funds, the growth rate of time deposit is high, so the CASA ratio has dropped slightly this year. Next, CDIB. Due to volatile markets and driven by unrealized mark-to-market from market fluctuation, the net loss in the first 9 months was around 0.6 billion, and Q3's income was around 1 billion, mainly came from the listing of some of its investment and the completion of M&A and stable business operation, increasing their valuation. In addition, the biomedical stock also performed well in Q3, driving gains from related investments. And for the equity, it rebounded to 28.5 billion in Q3, a decrease compared to last year. It is because of the 8 billion cash dividend upstream to CDF and the net loss of 600 million in the first 3 quarters. And because of strong USD and FX gain, it also has a positive impact on its net worth. Next, slide 28. Including asset management and principal investment, it has increased. For the third quarter, the cumulative fund commitment was 51 billion, and there are new investments, including the second round of committed investment from existing fund and the Mackin fund, which is expected to start operation in Q4. And for direct investment, despite the impact of investment position valuation driven by new investment, the overall market value in the first 3 quarters still increased by 1.9 billion. Taiwan is still the key of principal investment. In Q3, the position increases in China and international market, mainly due to investment drawdown and valuation increases. For investment in Taiwan, new investments were appropriated in the first 3 quarters. Next, KGIS. Stock market this year was very volatile. The transaction volume decreased. Therefore, net income compared to the same period last year dropped. And there are 2 other main reasons. First, because it does not recognize China Life's profits, therefore the figures dropped. And also another factor, the transaction volume and the performance of its business. In the start of Q3, through adjustment of investment position, they have reduced risk exposure. Therefore, the figure was low, and the ROE is also relatively low. And we can look at the AUM for wealth management is still maintained stable, slowly going up. And because of KGI size, due to the drop of valuation, it has a drop of around 7%. Page 31st, KGIS net revenue, brokerage commission and prop trading, it has dropped around 45%, and because of the market, as you can see on the slide, the first 9 months, the main contribution is still brokerage commission. These are the operations of our subsidiaries. Thank you for your elaboration.
Now it's time for our Q&A. Now we will first invite institutional investor and analysts to raise their question, and also please remember to click the wave icon in order to let us know that you have a question, and we will invite you one by one. First, let's invite Jamie Huang from JP Morgan to ask the question. I have 3 questions. The first is for China Life. Can you share with us your RBC ratio drop comparing to last quarter? What is the reason of such a decrease in your decline in your RBC? And what will be your internal control indicator? Is it still 250%? And also for your bond reclassification, what is your nominal balance and what is the scale of your reclassification? And after the reclassification, what is the proportion of your booking under OCI and AC? And the second question has to do with KGIB. The reason of a quarter-on-quarter decline is because of your funding cost. And if we look at your NIM trend and movement, is it less likely for us to see an increase, or do we have any measure to do margin enhancement? And as for fee income, I remember that KGIB is one of the few banks in Taiwan who can grow fee income. I believe this is coming from your loan fee increase. So I was wondering, in the previous 9 months, what is your momentum in the wealth management business? And lastly is the double leverage ratio for CDF. My question is that in addition to the impacts from the capital markets, after the reclassification, are there any other measure for you to enhance your double leverage ratio, or is your DLR only subject to the market condition? Okay, thank you, Jamie, for your question. You have raised 3 questions for our China Life and KGIB as well as CDF. I will first invite the Chief Actuaries from China Life to answer the question. Hi, Jamie. Regarding the RBC issue, as you know, the volatility in the financial market remains high from Q2 to now. The equity market is very turbulent. RBC is actually calculated on a 6 months average basis. So because of that, the number reflected is at around 31 billion. And we still aim to maintain the RBC at above 250%. And next, I will ask our CFO to explain the reclassification issue. Okay, thank you. In the slides earlier, before we made the reclassification, the net worth is about 70 billion, and after reclassification, it increased by 30 billion. So our net worth ratio has increased decreased from 4.4 to 3.1. And previously, before reclassification, the AC is about 9 billion, and after the AC percentage increased from 90% to 95% after reclassification. Next, we'll invite CFO of CDF. Earlier, you mentioned the NIM movement. In the earlier of the year, we have a guidance comparing to last year, there will be a 10 bips growth in our NIM. The goal this year is to have a 10 bips growth. We also expect that the NIM growth will slow down. This is because the cost of funding will gradually be reflected in the future growth of the NIM. So that's the answer to your first question. And as for the fee of the bank, certainly we have seen a slight growth in our fee coming majorly from loan fee. Our year-on-year loan fee grew 35% year-on-year, and the wealth management fee dropped 23%. And the wealth management related business has actually been impacted by the market momentum. And in the relevant wealth management product mix, we are also progressively positioning us in that regard. Okay, the last question is for CDF. We will ask Steve to answer.
Yeah, thanks for your question. In terms of DLR, a couple important comments to make. The first is that obviously the impact that we've seen this year is due to the change in OCI, which results in a decrease in net worth, which, as we all know, is market driven and to some extent temporary. Once market recovers, that will improve. Having said that, it's also important to highlight a few other points. The first is that every subsidiary remains very well capitalized. As you also know, when we purchased China Life, we also did that all without raising any funds externally. We've mentioned before that during the last AGM, we have received approval to raise up to 2.5 billion shares. Now, we plan on doing that, obviously, before the next AGM, and this is really subject to what we see in terms of what's happening in the market, our M&A pipeline, and also regarding further strengthening our financial balance sheet. So it's a combination of items, but again, OCI is the main impact, and we do have obviously other options available, which, as we said before, we want to tie to potential opportunities that we have been working on for some time.
Okay, thank you, Jamie. Next, we'll ask Peggy, analyst from Morgan Stanley, to raise her question. Can you hear me? Yes, please. I have two questions. First is for China Life. What is your mark-to-market loss for Q3? Your FVOCI is about 32.4 billion, and for overlay reclassification is about negative 60 billion. And what is the proportion for equity and bond? The second question is about your dividend. In accordance with the regulation, your loss, the OCI loss, should be reflected first before you do the dividend. So my question is, what will be your dividend payout for next year? I looked into your Q3's other loss in other equity. I don't think I have seen the number yet. So is it possible for you to cover the loss from your undistributed earnings? And of course, I know you need to make special reserve. So again, I still want to know what is your look on your dividend payout policy. Thank you. Thank you, Becky, for your question. There are two major parts. The first has to do with China Life, so we will ask China Life's CFO to explain. Thank you for your question. Actually, we're tracking this number on a monthly basis. So half of our is actually half and half for equity and bond. And your second question will be answered by Steve.
Yeah, so thanks for your question. In terms of the dividend, again, a couple comments. As you're aware, last year we paid $1, which was a 43% payout, which was above our peers. This year, OCI losses are making that more challenging. The final decision ultimately on the dividend will be subject to the board of directors, our capital needs, and also regulator guidance. So at this time, that's the best information we can provide you.
Thank you. Are there other questions from our investors and analysts? If no, then we will begin to invite our friends from the media to ask the question. Again, please raise your hand so that we can invite you one by one. Ask Ms. Shah from Economics Time to ask the question. Oh, we can hear you. Okay, my question is that earlier actually the previous speaker also asked about the dividend. I want to check with you because you have already passed your financial statement for Q3 by your board. I would like to ask what is your current number for OCI and what will be your earnings undistributed by Q3. And for example, your peer, for example, such as Cathay and Fubon, they will consider the capital surplus using that to pay out the dividend. Or do you have any similar plan? Thank you for your question. We'll ask CEO Steve to answer.
Yeah, as you're aware, there's been some recent comments from the regulator regarding use of the capital account. So, we're going to wait further guidance from the regulator before determining if that's anything that we should look at.
Thank you. Are there any other questions? We have another question. Please remember to unmute. Can you hear me now? Yes, please. I would like to know what is the impact of rate hike to China Life, and if the rate hike continues, what will be the impact to your recurring yield? And so far, you still haven't answered the OCI amount. Is it not a good timing for you to answer now? Thank you. You raised the question for both CDF and China Life. For China Life, we'll ask our Chief Investor Head to answer the question. Actually, under rate hike, China Life is trying to increase the recurring yield by investment, and our recurring yield actually increased about 10% comparing to last year. And in the next year, according to our estimates, since the rate hike is already at its peak, so the rate hike will not be as drastic as this year. So the actual number will still have to wait until next year after we actually made the investment. And your second question, we'll ask our CFO to answer. Because our Q3 financial statement hasn't been published yet, according to the regulation, so I cannot reveal too much information on that regard. Okay, are there any other questions? Yes, please. Because you have already announced the material information about your financial statement, I wonder, is it possible for you to disclose that figure? Because we have been asking this question repeatedly regarding the undistributed earnings as well as the OCI figure. And what will be your total retained earning? Is it possible to disclose that? Let me supplement. If we look into the second half year's H1 statement, our distributable earnings is in negative, and it still depends on the performance in Q3 and Q4 so that we can have a final result. That's it from our side. Now I don't see questions from the media. I would like to thank you for the participation and questions today. This ends our investor call today, and later you will be able to find in our investor session for today's recording as well as the material for the meeting. And if you have any further question, you're welcome to call or email us. And at the end, I would like to thank you all again and wish you all a great and fruitful day. Thank you.